Hello, my name is Terry Wetzel, and this is Tim Noyce. We are from Chesser Financial here in Champaign. We are associates with the firm. Jamie Chesser is the owner of our business, and we are here today to talk about money. Chesser Financial has been in business for over 20 years. We're located in downtown Champaign. I've been very fortunate to be an associate for the past 10 years, and Tim has been with us for 5 years now. And Tim and I together are going to give you a presentation of just general information that we hope will be informative to you and helpful.
Chesser Financial is located on the northwest corner of Neal and University, right across from Christie Clinic, and we're located in the Executive Center. So what we're presenting on today is we multitask every day. We have many demands on our life, but we also have many demands on our money as well. And so you should expect to multitask with your money as well.
Okay, so what have you done already today? We tend to multitask, especially us women. We play many different roles in our life. We are mothers, we may be fathers, husbands, wives. In a day, we might be the accountant in the family. We might have to take care of something that makes us the doctor, fix the sink, you're a plumber. There are many things that we do. We just do it. We multitask all the time. We need our money to do the same thing. We have a finite amount of money that comes into our lives. With that money, it has to protect us, pay our bills, support our lifestyle, pay taxes, you name it. We have all these expectations, and somehow we have to make sure that that money is multitasking just like we do in our own personal lives.
Not only does our money have to accumulate for our future, but we also have to have certain goals with our money as well. What should those overall goals be? We not only need to utilize $1 to have multiple functions, as Terry said, but we also need to create a strategy based on your own personal goals. We also need to utilize a process of efficiently building money without excess transferred dollars. And we'll explain what excess transferred dollars are coming up here pretty soon. We also need to save money for the future, for our future goals, without giving up today's use and liquidity. So what are transferred dollars? Whenever we talk about money, we talk about if we put money in savings and we put an interest rate to it, what will it accumulate for us in the future? We also need to know about when we spend money or when money leaves our pocket, what's the opportunity cost, or what could that have earned for us in the future? That's lost opportunity cost. Here's an example. When we put $10 in a savings account and it's earning a certain amount, we know that 10 years from now it's going to be worth X amount. Let's just say $20. Another 10 years on top of that, it'll double again, depending on whatever interest rate we're earning. The same thing happens when you're spending money. When you're spending money, that item that you've spent money on, or that money that's left your budget, also has an opportunity cost to it. That's also money that could have been in your savings and that could have earned for you. And so when we're working with people, we want to focus on what are the dollars that are leaving your budget? What are the dollars that are leaving your lifestyle? And when we focus on that, what is the actual cost of those dollars leaving?
So, believe it or not, we're going to start out with debt. Might seem unusual to some of you that as financial advisors, the first thing we're going to talk about is debt, but in many cases, it's a big part of your finances. And debt is one of the biggest erosions to your personal finances. So first of all, we got to talk a little bit about how debt works. We got to realize that, did you know that there is good debt and there is bad debt? Now, what would you think could be a good debt? Well, of course, the first thing that comes to mind is your mortgage. A mortgage structured properly in a financial strategy can be a good debt. However, other things are not as good for debt. Credit cards, they eat away. Do we know how credit cards work? As we know, they don't work very well. Interest amounts up, and it's a never-ending game. So we want to make sure that in our strategy, that we can set up ways that can help you to become debt-free throughout your life.
So what is being debt-free? Many times we'll focus on the fact that if you have the amount sitting in savings, that at any time you could willingly or unwillingly, or at the drop of a hat, be able to pay that debt off that could be considered debt-free.
You know, Tim, with debt as well, it's interesting that you can get people to talk about their colon habits sometimes before you can get them to talk about debt. Debt is personal. And that's one of the things that we like to drive home, that when we're talking to people about their finances, we understand how personal it is. In fact, what I constantly go around saying is, life is personal, money is personal.
So one of the things that we bring to the table, and one of the things that we work with our clients, is the process of organization. And many times you'll meet with a financial advisor, we'll sit down and we'll want to talk about savings, or we'll want to talk about investments. But sometimes we have to step back a little bit and look at things in more of a macro perspective. When we're focusing on just investments, or when we're focusing just on savings, that's a micro perspective. We're only focusing on one thing. But many times we have to focus on what else is going on in your life. And that's where we'll have a tendency to break things down into two categories. The first thing is, what have you put into your life that is protecting your assets? What have you put into your life that's protecting your savings? What have you put into your life that's protecting your investments? We'll focus on the protectionary strategies that you've employed first, and then we focus on the savings and investments. And the reason that we do it in that order is that many times it doesn't matter how good of a job we do at freeing up money. It doesn't matter how good of a job we do at investing. It doesn't matter how good of a job we do at finding the best rate of return on things. If you don't have your protectionary strategies put in place properly, that can completely go away at any time.
Okay, so when you come in to meet with us, the first thing we're going to focus on are these protection components that Tim has mentioned. And we want to make sure that we accomplish two things. We want as many benefits as possible, but we don't want to pay any more than we have to for it. So what are we talking about when we say protection components? Okay, I want to look at your car insurance. I want to check out your property insurance. Do you have an umbrella policy? Do you know what an umbrella policy is? Your health insurance. We all know what a huge deal that is in everybody's lives right now. What's Social Security going to do for you? Do you have a will? I stress this one. We are not attorneys. We don't want to help you with that will. We just want to make sure you get one. If you've got a young family and you have small children and you don't have a will, then who's going to decide what happens to your children? We don't want those kind of decisions left. Do you have life insurance? All of these pieces of your life are protection components that need to be properly in place. They need to be coordinated. We need to get as much as we can for the least amount of cost. So we're going to stress and we're going to spend time on these, reviewing them, making sure that they are set up just the way that you think they should be and maybe the way they are.
So part of our overall process is just simply organization. We want to take your junk drawer of finances and that you've got all commingled together and just simply push it together, smush it together, and organize it, and look at it in more of a larger perspective. And once we focus on the protectionary forms of things, then we focus on the savings aspect. What our overall goal is just simply three goals. Number one is to increase your interest rate as much as possible. Number two is to keep your money safe. That's very important, especially these days. And the third one is just keeping your money available, liquid. You're going to hear a lot of terminology, for example, liquid. And that's just basically meaning keeping your money available. There's multiple different places that you could put your money these days. They can include savings accounts, credit unions, savings bonds, CDs, money markets and checking accounts. And then there's three separate accounts that can be typed a particular different way. And you'll hear this throughout the presentation as well. One happens to be tax deferred, which we'll kind of review as far as what that is, tax-free, and tax deductible. Tax deferred is an example of something that you put money into and it grows tax deferred into the future. And then when you use it in the future, then you pay the taxes on it. Tax free is an example of something that you put in after tax and it grows completely free. And then once you take the money out, you no longer ever have to pay taxes on it again, even when you spend it. An example of that could be a Roth IRA. A tax deductible account is the thing that most people are familiar with, right, which would be an example of your 401k, an IRA, a 403b, any sort of pension program where essentially you're putting in the money before tax and you're not paying tax on it today, but you're going to pay tax on it in the future when the money comes out.
Correct. Okay, so if we're going to talk about money, and we're going to talk about debt, and we're going to talk about protection and savings, we got to talk about taxes. Another big erosion to your finances. Now, we understand that we have to pay our taxes, and we understand that a portion of each dollar you earn will be going toward taxes. However, we do want to make sure that a strategy is in place to pay the least amount of taxes and the most appropriate amount of taxes in your situation. So then you have to understand, though, how things are taxed. Tim's touched on them briefly. But when we save into a qualified account, there's another verbiage there, qualified account. That would be the IRAs, the 401ks, the 403bs, any account that money comes out of your paycheck, you have not paid taxes on it, and we're going to pay it later on. Please understand that you will be deferring the tax and the tax calculation. We don't know how that money will be taxed, so we just have to plan and understand that that's how those dollars work in your finances. We could start listing taxes all day long and of all the different things that we have taxes on. Income tax, real estate taxes. Check out your cable bill, check out your phone bill, check out your cell phone. They've got taxes to taxes. They're there. We can't change that, but that's where we want to put efficiencies into your finances so that we pay the most appropriate and the least amount as possible.
Many times when you're sitting down with the person who does your taxes, one of their jobs and one of the focuses will be on saving taxes today. Where can we put money to save taxes today? One of the things that we want to focus on a little bit not only is saving taxes today, but also a strategy in order to save taxes into the future as well.
And I'd say that's probably one of our main focuses when we meet with clients, and is that macro perspective that we're talking about. We want to make sure that we have helped you save the most taxes over your lifetime. When you do your tax return every year, as Tim mentioned, the job at that time is to try to save the taxes that's appropriate for that year. We want to step back and look a little bit bigger over the lifetime and the amount of taxes that can be saved during their lifetime.
So who do you listen to? Do you listen to family? Do you listen to friends? Do you listen to online or magazine advice? Do you listen to radio or TV personalities? Do you listen to people that are talking on Urbana Public Television? Do you listen to financial professionals? You have to understand, when you're listening to people on TV or you're listening to radio personalities, they're talking to a general audience. They can't give specific advice, but many of them try to give specific advice. You know, not everybody's finances are the exact same. My finances are completely different than Terry's. I'm in a different stage of life than Terry is, and Terry's in a different stage of life than I am. And so what I would do with my finances is probably completely different than what Terry would do with hers. And so you have to step back a little bit and say, okay, this online personality or this TV personality is telling me to do it a particular way. What is the most appropriate way for me to do it myself? Or what's the most appropriate way to work with a financial professional and put in a clear, specific plan for what my overall goals are, as well as what I need to achieve not only in the short term, but also the long-term aspects of things.
Yeah, just to drive home that point as far as listening to the media in general and all the different forms that you get information, please keep in mind that, as Tim said, when you talk to a big group of people, we haven't had an opportunity to meet you and to talk with you personally. All of the famous people out there that are talking, they are talking to a big group. But if they had an opportunity, like we would like the opportunity to sit down with you, then they can get more detailed and more in tune to what is going on with your finances. And I'm not sure that information that you hear in the masses would always be the same if those same people could sit down with you on an individual basis based on your finances. So, what stage of life are you in financially? What stage of life are you in, period? The financial world, most people that you're going to sit down with are going to come and evaluate where you're at in life. I have 3 grown daughters. They are starting to have families. I have a couple grandchildren. They are in their accumulation phase of their life. If they were to sit down with a traditional financial planner, that's what they're going to be told. They're young, they're acquiring a family, they're acquiring assets. Mr. Timothy, in the accumulation phase of his life. Then there's the distribution phase. Theoretically, I'm getting close to that timeline. I think I'm going to be still working at it for a while. But when it comes close to retirement time, then we're going to, as advisors, say, well, you are in the distribution phase. You've saved through the years, and now it's time to start spending that money. And then there's the protection years. That's when you're trying to conserve your money, making sure it lasts for the rest of your life, and then hopefully to hand down possibly as a legacy to someone else. Guess what, guys? Life doesn't work that way. Those of you that are supposedly in the accumulation phase of your life, you're trying to pay bills, you're trying to pay for babies, you're trying to pay school fees, you name it. You have all these things going on. And yeah, you're supposed to be in the accumulation phase, but yet you got to be spending money. Same way with distribution. Tell me anybody that's sitting out there that's retired that doesn't still feel the need and the importance that they need to save money as well. Life just doesn't fit like that. We have to have a plan that allows us to save money, but it also has to have a spending strategy in that plan. Because there is no just accumulation time. There is no just distribution. There's not that time where we are just conserving and that's all we're worrying about, making sure that we have enough money till the end of the time. Life doesn't work that way. Your finances have to be considered into those strategies. So we'd like to leave with you with just a couple little thoughts for you. Again, as I mentioned before, we have a very strong belief in the fact that what is going on in your life, of all the different aspects in your life, so much tie into your financial. And we have to know that there's one path that you're taking in life, and all these things in your life are happening on that path. And your finances are a big part of that path. So we just want to leave you with a few words to ponder on for the day. So before you speak, listen. Before you write, think. Before you invest, investigate. Before you criticize, wait.
Before you pray, forgive. Before you quit, try. Before you retire, save. And before you die, give.
Thank you so much for joining us today. Tim and I have enjoyed spending some time with you. We would welcome the opportunity to have you come in and meet with us and talk with us about where you're at in that financial path. Feel free to contact us at Chesser Financial. I think they'll have the information below for you. We're downtown Champaign, 115 North Neal, Suite 200. We would welcome the opportunity to meet you and work with you. Thank you very much.